Welcome, everyone. Glad you all could join us to our 2021 Israel Dealmakers Summit. So our first breakout of the event. We're super excited here to have some great guests. And the topic is the future of mobility. So my name is John Kunschner. I lead the investment banking practice here at Landmark. We work with a variety of companies, big and small, across the tech landscape. And certainly this topic is front and center for us in many ways. I will say it's been a very interesting 2020, 2021 with regards to this segment, from kind of the complete shutdown of the economy and transportation and depressed car sales and people panicking that the world was ending, to probably the most prolific investment cycle for public offerings and SPACs and investment into the mobility space that we've ever seen, and kind of what the fallout will be from that from here. So I think we have a lot to talk about. We've got about 30 minutes of kind of moderated discussion, and we're going to open this up to the audience for Q&A directly with our participants. So should be a lot of fun. To start off, why don't we just go around, do a quick introduction of our speakers here, background, your role at the company and what your company does, and then I'd love to hear one kind of key theme or focus for you in 2021. I've got my own topics, but I want to make sure that I keep this attuned to what's on your minds as well. So maybe keep it just to a minute or two, and then we'll dive into some of the discussion. So Lior, do you want to start?
Sure, happy to. Hi, everyone. Good morning. My name is Lior Tal. I'm the CEO of Cyngn. We are a California-based software company funded by Benchmark and Recent Horowitz, some of the better names. We offer industrial and commercial autonomous systems, and our focus is on the software. We built the full driving system and all the management tools and development tools needed to drive an autonomous system. But we don't work on the hardware. We collaborate with companies that have the sensors, the compute, and the vehicles themselves. And together, we go to end customers and offer industrial autonomy solutions. And that spans from yard to warehouse to private facilities, everything sort of geofence, but at different sizes. I'd say, as John said, I think 2020 was a year of really being head down, building, developing, fixing. And 2021, we're seeing a lot of, it's like a spring. We're seeing a lot of things opening up. Companies open to innovation, companies opening their facilities, and there's a lot of ecosystem activity. And one of the things we're most excited about is the work we've been doing with multiple groups of companies around how to scale up autonomy, how to integrate with 5G and sort of new technologies that are in support of these new systems. So happy to be here and looking forward for the conversation.
Great, thanks, Lior. Talia?
So thank you, John, and thank you for the Landmark team. I'm happy to be here. My name is Talia Rafaeli. I'm an investment director with Porsche Ventures. Porsche Ventures is the CVC of Porsche AG out of Stuttgart, Germany, focusing on investments in automotive technologies, mobility innovation, digital transformation, and the business models that are attached to it. But we also focus on topics that that have to do with the lifestyle choices of our customers. In addition to that, sustainability is also one of the topics that we have started looking into. I think in general with the industry, there are so many trends and shifts going on simultaneously that we are excited and working on a number of topics. But I think one of the greatest things that I think is currently happening is a shift in how we view our investment strategy as a CVC, and the topics that we are looking on as search fields based on where we believe the industry is going, and considering the role that we want to play in different aspects. So as a corporate, what responsibility and what role do we want to play in the changing market environment? And this takes into consideration so many different topics in technology developments and regulations, and the shifts in consumer preferences. Also on an individual market perspective, we don't look at China the same way we look at Europe. So to us, this is really both mind-blowing and exciting, and positioning ourselves really at the cusp of these developments really makes us feel like we're we got the tickets to the best show in town. So really exciting times to be in the industry.
Great, thank you. Ulrich?
Yeah, thanks for the invitation. I've been running BMW Venture since 2011. Started with a team of one, then two, then three. Now we are at 11 people investing out of a 500 million euro fund. We did 55 investments, have something like 12, 13 unicorns in the portfolio. Certainly the recent SPAC development has helped a little bit. We invest in anything that's relevant for an automotive company. It could be manufacturing, could be e-commerce platforms, car technology. So it's pretty broad, anything that's relevant for a company like BMW. Yeah, and I think the recent development that we have been seeing was a stronger interest in sustainability from the market, but also from BMW. It's one of the top 3 priorities, I would say, over the next 10 years. They have very ambitious goals, and we would like to support them doing good investments. We started last year, adding this field to our investment field, and then did the first couple of investments. Hopefully, this year more will follow. We already did one, and a couple of more will follow.
Excellent. Well, welcome, guys. So I want to start. I want to pick your brains relative to what we see in the market. I mean, we've seen, the LiDAR, basically every major LiDAR company, most of the EV companies, the pure plays, and a lot of the kind of supporting technology around fleets, go public through SPACs. And a lot of these were heavily venture-backed companies, relatively early in terms of their revenue cycle, but lots of good developments. I'm curious, and anybody can, what do you make of this? Is this a bubble? Is this the exact thing the industry needed to drive the final leg of financing to reach commercial scale? Or is it somewhere in between, and there's going to be some winners and a lot of fallout in between? I'm just curious opinions around kind of the last 6 months of activity in the space. And anyone can start.
Happy to start. We are heavily impacted by the current interest in especially in the EV space. We have a lot of companies that are interesting for SPACs, and that's not a coincidence that 5 of our companies have already been acquired, and another, I think 7 is it now, in discussions about an acquisition. And the thing that I see is that if you compare the latest venture rounds with the valuations of the SPACs, the SPAC valuations are higher, right? Sometimes 2 times higher than a round that was done a few weeks, months before. So that's certainly one takeaway. On the other hand, the share prices are now generally, on average, much higher than they were at the time of the acquisition. So there is public interest in those areas. It seems there is money that before struggled to get into those companies, and now is very interested in those companies. So there's a market, there's a demand. I would say there are certainly companies that will not live up to the hype, that are definitely overvalued. But I would say overall, we see the trend very positive. We think that the outcome for the company and for the investors will be good in many cases. But there might be a correction in valuation, in my perspective. So the more company go public, I don't think that this initial phase of overvaluation will continue. There will be a correction, in my perspective. But we expect the trend to continue, and we think one indication of that is that the venture funds are also raising their own SPACs. Basically, like the logic is, we invested in this company. Now this is a late stage investment. We also want to lead this, but we do this out of a different financing tool. And I think that's very encouraging that venture companies believe in that. And we expect this to continue, maybe with a slight correction on valuation in some cases.
Yeah, I would follow. Sorry, did you want to?
No, that's good. Go ahead.
No, I'll follow what Ulrich said. I think in general, we are cautiously optimistic in terms of everything that's going on in the market. This is not the first time that we've seen SPACs. We've seen them in previous cycles. On the one hand, you can be optimistic and say this could really accelerate the development of technologies. These companies are raising money that in order to become commercially independent. They don't need to go through these milestones and continue to raise periodically. This leaves them very well capitalized. You know, as long as these companies are prepared to go public. I think what we need to be wary of is how, you know, we see the SPACs going earlier and earlier into companies that have just raised, you know, Series A, and maybe, you know, a little immature in order to really, you know, have, you know, the periodic developments that are usually required of public companies. And so I think that as long as the companies that do go public are prepared to do so, and they have the, you know, they have some of the traction and the technological development to do that, we do have room to be optimistic. I think a lot of it depends on where this goes from here.
Maybe one more angle to this from more of the entrepreneur side, and you know, having this is my fifth, sixth company, and you know, always having raised from VCs, this solves the potential to solve a problem that teams and founders have in liquidity, right? And you know, raising engineering teams in the Bay Area and competing with the Facebook and Google's puts a lot of pressure on being able to provide your employees an alternative to exercisable RSUs, right? And this is one of the things that would solve that limitation in private funding and reduce the pressure for an exit, right? On the other side, and I hope this indication really proves that the public market will have patience for long-term roadmap execution, because at the end of the day, one of the things that drove companies from getting to the public market too early is the squeeze that would require the teams to do quarter by quarter projection, execution, and delivery of results, pretty often on account of like proper growth and putting a foundation for future larger potential. So I hope this experiment works, because I think it expands the access to funds and new structures.
Yeah, I mean, one thing I would add there is I also think it's going to drive an incredible M&A wave, because now that there's a lot of different companies that may have focused on the hardware but realize they need to acquire software. There are elements of, you know, fleet management or different connectivity or all sorts of things that you need to shore up to be a self-sustaining company. And now there's kind of the coffers that are full to go acquire some of these earlier stage companies. And so, you know, good for me as an M&A advisor, but I think it's for the industry, it may find the right home for a lot of technologies that I think we're, you know, kind of hitting the wall relative to venture investing, because there were so many companies out there, and this, you know, as we've seen in prior IPO cycles, it drives a lot of M&A downstream, which can be a good thing. I'm curious in terms of that comment, like, as large OEMs in the space and as, you know, a software company emerging in the industry, does this change the kind of the view of what is the right model, right? Do you need to be a kind of full service, you know, branded player in the space, or can you be a tech enabler and play horizontally across these verticals? I mean, you know, maybe starting with how that affects your investment thesis now that you've got all these players that are out there, and how you approach business models as you go after some of the end customers. Now, maybe start in reverse, Lior, if you have a thought there.
You know, it doesn't materially change the way we think about building the business, because at the end of the day, there's a logical progression that you have to go through, where you need to build a foundation, you need certain engagements with supporting ecosystem, you need to have initial engagement with potential customers. And then when you start feeling the traction, only then you can start sort of hitting the gas and putting more investment in that. And if you don't feel the traction, you need to go back and redo or rethink or replan. So to some degree, I think what sort of the way we think about this internally is contingent plans given access to different levels of funding, right? So if our plan is to raising a certain amount, and you know, we have some kind of flexibility around what we can do if it's a little less, a little more. What happens if it's double, right? What happens if you get access to much more funds? I think what I've seen previously in, for example, companies that got large investment from SoftBank, is that sometimes you have a 50-50 that they'll collapse the company because it happened. It's an excessive weight on the company and you don't go through that progression. So, to some degree, I think it's very, it opens a lot of opportunities, but managing the company, knowing what you need to build and being able to create that value and get it to the market and get the traction, it's sort of something that doesn't materially change my plan.
Yeah, I would add that I don't, in terms of our investment thesis and the way we look at companies, I mean, we are a strategic investor before we are a financial investor. So it really depends on the, the individual technologies and how this will support in general our strategy, where we want to go, whether it's in the areas of production and manufacturing or for our vehicles or in mobility innovation. So yeah, I mean, it's also hard to say. We try not to be, blindsided by trends in the market in terms of, whether they are bubbles or not bubbles. We really look at the technologies. We try to go as early as possible to get, a good foot in, to partner with these companies, and where that leads them at the end of the road in terms of their financing and what options are available. As a venture investor, we tend to be there to support the companies throughout the process. So we do follow-on rounds, and we expect to continue supporting our portfolio companies. But where that leads to at the end of the day, whether whether a potential IPO, M&A, or it's a hybrid structure, is not something that we think of when we develop our investment thesis.
Working any further to add?
Yeah, I agree. It has not, the development has not changed our investment thesis. One thing that did change, we received more pitches where a SPAC acquisition is on the horizon. So now it's the last investment, and then we already received a term sheet. So this leads into the SPAC. So that's sometimes, of course, tempting, but also we've resisted a couple of times as well. So we don't always buy into that. Fact that someone offered a term sheet doesn't always mean it's happening. So that's why you have to be a little bit careful as an investor. But it would also confirm the point that was made before on the risk of having too much money. We have also seen this as well in our portfolio companies that have had too much money. They didn't always manage it well enough. So sometimes austerity and fewer funds are better for the development of the companies. That's certainly a risk you have to take into consideration when you are building a company or investing in them.
Got it. Interesting. This may be a little less relevant to you, Lior, but I want to ask a question around the kind of the wave of EV options and the new brands that have come into market and the number of models that are expected to be released in 2021. As two of the most kind of recognizable, quality brands in the automotive space, what is the role of brand? What is how does the engagement with the consumer change as you now face not only Tesla, but Rivian and Lucid and Fisker and Ferret, all these new kind of entrants with a very different product set and frankly, a more digital approach to the whole ecosystem? Like, what is that now becoming your priority, or do you think there's just a role for the quality brand you've developed and maintained over many, many years that it will persist?
I mean, it certainly has an impact on I just was part of a presentation where all the launches of models was presented over the past 5 or 10 years, or the next 5 or 10 years. And it's certainly those new companies that are typically nimbler, smaller, faster, have an impact on the speed and within the company. And I welcome that, because I think it's a good thing to feel the pressure of competition and feel the urgency to launch great new technology. So I think as someone who is used to investing in stuff that's moving fast and is taking certain risks, I think that's a good development. Certainly competition makes the market more interesting and makes everyone move faster. So it's certainly, things have become a little less predictable. You have to, when historically you could rely on your on your ability to build the best combustion engine vehicles, doesn't necessarily mean you build the best EVs, right? You have a good shot. You have certainly all the tools that you need, but at the same time you have to progress in your development as a company. So I think it's a very interesting time to be in an OEM. We are obviously watching closely, and we can help, I think, well in these times when we are at the edge and we are always looking at latest technologies and latest developments. So I think our as a corporate venture fund, our role is more important in these fast-moving times than there would be in times when you're well established. There's not much change in the competition, so it's a good time for a CVC unit, in my perspective, and a very interesting time to invest in those topics.
Talia?
Yeah, well, I'll agree with Ulrich. I think I think competition catalyzes excellence. And so all the new players that are emerging and the existing players, I think only forces you to become that much of a better player yourself. That being said, there is a lot of effort being put on, being part of the entire software stack, all the way to the consumer-facing application, to really capture the audience and to communicate with the audience, your end consumers, I think also as a CVC, we're looking at a lot of these technologies that allow us to, be at the forefront and capture our customers. In the end, Porsche and many premium brands see themselves as a lifestyle brand, not just a mobility player. And the importance of maintaining that audience and maintaining those customers is really, really important, especially in the face of so many changes that are ongoing. And so I would say that is a huge effort that the company in general and us as a CVC to enable that, are placing on that topic.
I agree. I think those digital channels. I saw you did a partnership with a media company recently too, which is interesting. Right, this was last year. So I agree. So we'll see how things develop. But changing topic a little bit, I want to focus in on autonomy, and certainly we all have opinions here. It's been a up and down road for autonomy over the last, I would say, 5 years. Couple questions. One is, what in your mind is the role of autonomy as we look at the proliferation of EVs? And I guess, geared use, your kind of what other opportunities may hit sooner than the holy grail of autonomy? Maybe you want to start, Lior.
Yeah, sure, happy to. And it's always different being in the factory that makes the hot dog than sitting at the benches eating it, right? So I have a slightly more practical opinion about this, right? But I think at the end of the day, the reason we got into this space is because of the potential impact this technology can make on such a broad set of different uses. And we call them applications, and it can be anything from self-parking to a forklift to an airplane tugger. At the end of the day, in abstraction, they're the same problem with different circumstances, right? And the way we approach it to start with is limiting the problem space and being able to complete something earlier, and then think incrementally, what is the next size of problem we can take and is attractive enough and move onward. And I think today, so many years after the DARPA challenge, you're starting to see a path to convergence where it was predominantly research for a long time, and eventually it started getting more towards the winning technologies and winning approaches, and those that didn't prevail. And more you see different teams taking the same approach, and eventually one of these teams is going to get it across the line. And if you're looking at a robotaxi, it's all or nothing, right? It's binary. Either you have an autonomous fleet or you don't. That fleet can then get you the utilization and cost saving, or you have people and it doesn't, right? The space that we took, the industrial, the commercial, the geofence, the smaller problems, the more limited sandbox, just gets you there faster, right? And the approach we took in taking the same robotaxi design and architecture and choice of technologies and talent and applying them to this problem is by understanding that older technologies have a ceiling that cannot be breached to solve the problems that you're seeing there. For example, if you work in a mixed human-machine environment, you need to be able to predict what people are doing unless you can control what they're doing, and therefore you need prediction and you need classification and you need learning and you need all these things that you see on the street, right? So I think autonomy is here to stay. It will get solved. It will get solved one way or the other. One way that you're seeing in China is in support from the infrastructure, and by reducing the amount of free radicals in that space. And once you get across the line and you get to a place where you have less or no human vehicle operators, you don't go back from there, right? At that point, it becomes an autonomous facility, and or an autonomous part of the city or an autonomous lane on a highway. And for that point on, you reach the stage where that technology then starts scaling up and reducing costs. So I'm a believer, but I think it's more of it's a step deployment, and it's gradual. But I think this year is the year where we're going to start seeing more scale deployments. And I see the first, I think the first projects coming out of China because of the central government push and the more, let's say, structured approach to allocating funds there. But eventually it's going to reach Western Europe and so I'm saying Europe and US and other places.
Ulrich, where do you see autonomy playing a role? Is it a supportive technology, or you kind of focused on the holy grail of full autonomy at some point in your roadmap?
I mean, speaking for BMW, it's more supportive technology for now. It helps making the car faster, making the ride easier for the driver when he's tired or when he wants to take his eyes off the road. So it's certainly less radical than a startup that has to disrupt the market. And that's also, to get the balance right from an OEM's perspective, it isn't easy, right? So on the one hand, you have a core business that pays all the bills. On the other hand, you need to have a foot in a business that potentially disrupts your own business. And you know, BMW has done this by having a huge team that's focusing on autonomous vehicles. But when it comes to vehicles that have been launched and announced, right now the technology, autonomous technology is certainly supporting the driver, and there are no plans to take out the steering wheel, especially for a brand like BMW. That's not on the table right now. So it's certainly, in our case, supportive technology. As I ventures, we have taken investments in the autonomous space. So personally, I believe in it, and I think it will have a strong impact. Obviously, for brands like BMW, we you know, where they're focused on driving, we might be impacted in a different way than other brands where it's just about getting from A to B, and Porsche is probably similar, right? So I think we may play a certain role, even if full autonomy comes at some point. There may, you know, I think there's still a market for brands like BMW and Porsche, even in 2080, when maybe the car becomes something like a motorcycle that people are driving it because, of course, they could. It's because they enjoy riding it, right? So I see even the long-term future for brands like Porsche and BMW, and I think it is interesting to be part of the journey. But it's certainly something that is, for companies that are planning 5-10 years ahead, it is not easy doing that, not knowing when those technologies hit the market. So it's certainly one of the challenges that the companies have.
Yeah, I'll just add, I think the way we approach autonomy, and I'm speaking from the perspective of the CBC and as an investor, I think, you know, autonomous vehicles is a journey. Everybody thinks about, you know, when we will reach full autonomy, when L4, L5 will happen. And obviously there's so many different challenges in that respect. You have technology, you have regulation, you have consumer preference. I think as an investor, you can see it as a catalyzer to a lot of, you know, different opportunities. It will start with, you know, assisted driving technologies, and there are many great companies out there with great technologies that are, you know, supporting the development of autonomous, but, you know, in the L2, L3 realm. But when you do think about when full autonomy hits, it opens up a whole new, you know, opportunity in terms of additional business models. Because if you are becoming a consumer of mobility as opposed to a driver, or as opposed to a vehicle owner, then, you know, what is the consumer experience going to look like while you're on that journey, and how many business opportunities does that open for you? And so a lot of premium vehicles or premium OEMs are thinking a lot about, okay, how do we augment, you know, that consumer experience, the driver experience, the passenger experience? What technologies do we, you know, bring into our vehicles? What is parking going to look like? What does that mean about real estate? And so there's so many different facets to autonomy in general. And I think as an investor, you need to look at it from so many different angles. But in terms of opportunity, it just opens up so many really, cool business models that you can look into.
That's great. I want to share, we've got a few questions from the audience, and I welcome participants to go ahead and submit them on the Q&A bar, but a couple interesting that came in that I kind of tied to some of the things I wanted to ask. So I'll read some of this. So several years ago, I saw a USA presentation that value of data flowing from vehicle would essentially pay for the car. Things like range sensors that sell to the weather company, speed sells to the traffic companies, mileage sells to oil change tire companies, air pressure for emergency repair. So it begs the question, my thought was more around, what is the changing business model around car ownership, car sharing, fleets, and the use of data that's being gathered from the driver, right? I guess I'm curious, opinions and philosophies around investment within that area.
I can jump maybe, John, with, sorry, go ahead, Ulrich.
No. So we've looked at a couple of companies that are trying to monetize data. It is still early stages, even though they have been on it for a number of years. Autonomo is one that from Israel that is going public. So I personally think it's really interesting, but on the other hand, it's also not easy to scale. If you look at it's often with data business models. At first, they look really, I catch myself being very excited about it. The deeper I look into this, the more I realize, well, it's a good idea. It will come at some point, but it's not as easy as it sounds, right? So it needs so many people being involved, being integrated, everything integrated in a car. It's tricky. It's a tricky business from a venture perspective. I think it's certainly. I can see that some of the guys that are. Some of the tech companies that are launching cars are not focused on making money by selling the vehicles or getting revenue from rides, but that are focused from data gathering in the first place. I can see that happening. From an investment perspective, we have been reluctant to invest in companies that are focused on that because in the horizon that we have, which is 10 years, we see challenges. Longer term, I'm optimistic. I think this is going to be relevant and important. In the investment, from invest perspective, we have been skeptical so far.
I think one way to look at it is what actually unfolded in mobile, right? And there's been some attempts over the years to have a fully subsidized phone service or data service, and the numbers over there never added up. So it might have been in support of the cost, or some companies built businesses around it, but I never really met the scale of being able to subsidize the whole hardware. I think in this specific situation, at least the things that we're seeing is, in some cases, for example, if you look at very expensive industrial machines, predictive maintenance can really save you large amounts of money. So you might not subsidize the entire cost of a Komatsu or Caterpillar machine, but it can save the operator significant enough amounts of money to create a whole new business model in data analytics coming as a secondary beyond automation to these vehicles and these machines, right? You can improve the productivity of the site because you see traffic flow and you can change things to increase the yield of production, right? So I think it's in the right path. And I think generally, once you invested in having compute and communication and sensors on these machines, there's no reason not to harness that into more data products, but probably not completely subsidizing the hardware and data.
Yeah, I think we are in fleets and industrial and commercial applications, that data may be more valuable than in passenger car situations, for sure. Ulrich, any further thoughts or no? I'll raise, there's a comment here that kind of refers to Elon Musk's view of LiDAR, and I think he called it a joke, and a question of, how do we look at the technology development cycle for LiDAR, for camera, for the supporting technology of autonomy? Any opinions about winners, losers there in terms of the technologies you guys are looking at?
I think, without saying too much about, what is, what specific technologies we're looking at, I think there is opportunity for, and we're seeing that with a lot of young startups that are coming up with new technologies, new developments, and innovations to disrupt, the current LiDAR offerings. And just to say that in terms of market perspective, there is room for these emerging technologies. I think that as long as the price point of LiDAR remains as high as it is, there will always be, potential customers that are looking for alternatives. And we are seeing this trend of new, emerging companies, up and coming technologies that are offering, these alternatives at a much, much lower price point. It's still early to say whether they could provide the same performance and the same, safety requirements that LiDAR can provide. But I think there, in terms of the way I see it, in my perspective, is that there is room for these technologies to scale as well.
Just one additional thought. So right now BMW is trying to use all the sensors they can. If one of the sensors becomes so good that you don't need some of the others, whether it's visual or LiDAR technology or radar, then of course everyone would try to reduce the cost for those sensors as much as possible. Right now, that's in BMW's view, it's not the case yet. So we need all three different sensor technologies, but I think longer term there's a chance that only one or two of them is relevant, so you can reduce the number of sensors you have and ideally focus on the cheaper ones if possible.
You can't be an recent company without subscribing to the notion that software is eating the world, right? So when we build these systems, we actually start from the center outward, which is what is the software component that replaces the decision making in the human, and therefore upstream, what do you need to feed it in order to make the decision? What do you need to see in order to collect the data? And then outward, that gets you into the physical world. And I think in my mind, two things will happen. One is, I think, similar to what the two of you said. There is going to be an evolution in these technologies, more miniature components. Supply is going to be larger scale, so lower cost. So I think over time it's going to be more and more commoditized, and maybe multiple technology sensors. Where, for example, if I think I have as one of their differentiators is getting speed on a pixel level, which is something you only got from a radar before, and that solves a huge problem in prediction, knowing the speed of an element, right? But I think something that John, in my mind, is more powerful than that is that software is actually going to be the competitive advantage and moat for these sensors, and they're going to try moving up stack into providing more services than just the hardware. Because if you can get the object flow from the sensor, it saves huge amount of work for the company that builds and integrates the system and the central computation you need in order to digest it, right? So I think there's going to be probably more sensors, high fidelity, lower cost, and also more functionality on the data and software layer from these sensor providers.
Very interesting. I have a couple questions here that I kind of agree with. We've been talking a lot about vehicles and cars, and then a couple questions about I call it collective mobility, micro mobility, things that are not cars, right? So whether it's shuttles, whether it's scooters, whether it's different ways of thinking about the future of mobility. I'm curious thoughts where as the automotive OEMs, are you looking at investments into these other forms of mobility, and how does it influence your model? Then for you, Lior, kind of how are you thinking about autonomy as relates to some of those technologies?
I can go first.
Great.
Go ahead.
Yeah, I will definitely say that this is an area that interests us very much. Whether it's combining our products together with a micromobility offering, or just allowing the last mile. through an alternative service, or just as investors to kind of really learn the space. But I think in general, micromobility is here to stay. And I think that all players in the mobility market need to be aware and understand the importance and the potential. It's part of a larger trend, I think, in general, that we are keeping an eye on, anywhere from urbanization in general and what shifts will take place as a result of the urbanization trend. And as cities become smarter, and that all the technologies that are in play, anywhere from 5G vehicle to everything, I think micromobility is going to be a stalwart in this in that environment. And I think that as OEMs, we need to integrate our product somehow into this value chain. And so I would say definitely yes.
Great.
This is a few years ago. We spent some time with the government in Singapore, with the Land Transportation Authority, and representative. They were planning their, I think it was a 2030 transportation plan there. And one beautiful thing is that they think about their space almost like a cardiovascular system, where people sort of move in and out from the center to the residential areas and back. And you have the arteries all the way down to the smallest vessels. And I think in a model like that, different types of transportation means work together to provide the needs in the last mile, last 10 miles, city center. So I think these are all here to stay, and they're going to be sort of fine-tuned to what is that handoff from one transportation means to the other, and what's the one that takes you home at the end of all of it. But the one thing that sort of connects all of them when you think about autonomy, automation, data intelligence, is if you can achieve shared infrastructure, you can achieve the cost of operating all of that. And if you have one semantic map for the whole site, and whether a vehicle or a bus or a scooter uses that, then you don't need to replicate the cost of mapping that site. So I think there's going to take some time until there's stabilization, but I think there's a big role to play here in data and infrastructure to enable that as a sort of fluid experience.
One thing I would add is when in previous years the trend was certainly more shared mobility and shared transportation, the trend I think 2020 was certainly individual transportation. So we saw a big people being increasingly interested in just being by themselves and not sharing space with others. We will see how long this takes, but we have seen a lot of interest in individual transportation, and micromobility is a part of that, because we are investors in Lime. Even in those difficult times, Lime scooters have been doing well, if they were allowed to operate, obviously, because people prefer being on a scooter rather than in a crowded subway. So I think individual transportation for me was one of the trends in 2020 and during the pandemic.
Yeah, very interesting. Question here that I had a similar one, which is, as you think about, and I guess it ties both to consumer automotive and passenger cars, but also commercial vehicles. How much of the next 5-10 years will be the sale of vehicles versus the sale of services, software upgrades, data packets and packages, mapping? How do you think about your businesses going forward as related to the vehicle, and then to kind of all the other stuff that frankly already today is generating some revenue?
So I don't have any confidential information on BMW's end, but my guess is I don't think BMW predicts a big change over the next 5 to 10 years. Right now, there's based on the current technologies and the current vehicles, people continue to buy vehicles, or to lease them, to own them, to have them available at any time. It's think about people with families. They still want the car in front of their doorstep because they need to make trips all the time. So that's I think the perspective from most OEMs in my view. Personally, I also think that there's an opportunity, of course, for companies that have to focus their business models on it. But on the OEM front, in my perspective, not too many changes over the next 5 years at least.
Okay. Talia?
Yeah, I'm in agreement. 5 to 10 years is on the one hand, it's not a long time for the OEM perspective. On the other hand, we will be seeing shifts overall, in consumer preferences for ownership and vehicle ownership in general. But I think in as you have BMW and Porsche here on the call, you will see these shifts happening much earlier with the more mass market OEMs before you see that hitting the premium OEMs, and so you will start seeing that. You may start seeing that shift towards less vehicle consumption in general and more spending on the peripherals before you see it hit the premium market. But we can expect to see this shift within the next 5 to 10 years.
Yeah. Lior, do you have a view from kind of commercial industrial OEM perspective as you chat with folks?
I think companies are identifying, especially in the lower cost, larger scale, that the future is less about the metal and more about becoming integrated with the workflow or the infrastructure itself. And I think the problem that we're seeing with some of the situation is that if you design a vehicle to be if you design the platform to be more software centric, like what does it need to be in order to accommodate data and software capabilities, then you just take an inverse approach instead of trying to retrofit something over the top or after the fact. So I think this just happens faster in the industrial space, where you see just like more platform coming out of startups that disrupt the existing OEMs. But I think these platforms, they're just not as complicated as a passenger vehicle. So it happens faster and there's less implications. But I think at the moment, I think it's just going to happen slower. I don't see that. I think the core functionality of the vehicle is going to be there for a long time before anything else sort of flips and becomes the predominant value.
Yeah, fair enough. Few questions here relating to kind of the proliferation of EVs. Question of should governments subsidize? Should we create retrofits? I'm curious. We didn't really talk about sustainability and environmental concerns around EVs or other factors that may be driving change in the industry, not just consumer preferences or commercial applications. How much is that stuff on your mind as you think about strategies in terms of either partnering or working in certain geographies that are more supported by the government or not, and kind of the overall sustainability picture as you drive down your either your investment thesis or your business models?
I mean, as an investment topic, this has become front and center for us. And I would say this is one of the more dramatic shifts that we've experienced in the last, I would even dare to say, year. The race to become a carbon neutral organization and all the sustainability technologies around that, anywhere from our manufacturing production technologies, our supply chain, the way we view circular economy, how can we what's our upstream strategy in terms of end of life for the vehicle, and what potential do we have for circular economy in that aspect with recycling materials. I think that in general, this is one of the topics that is going to be primary for most manufacturers, not just on the investment front, but also on the adoption of the innovation that we will start seeing, in the immediate term.
Ulrich, for you, sustainability as a kind of theme?
Yeah, so sustainability has been a new topic since last year. We invested in ChargePoint in 2013. So it's you can see that we're just a leading EV charging company in the US. So you can see that we always believed in in the success of EVs, when the time when it wasn't clear, right? The biggest concern with that company at the beginning is how fast are EVs coming, and how fast are OEMs adopting this technology. It turns out that the speed is faster than many people have thought, and I think the focus on sustainability is a key topic. Differentiation especially for the premium manufacturers. Customers are expecting that cars from the sourcing of the materials to the recycling of the vehicle, people, it influences their purchase decisions, whether someone is very responsible with all the materials. It's not only about the drivetrain, but it's the whole journey from the cradle to the grave, basically, of a vehicle that is relevant for customers. And we see this increasingly, and we put a huge focus on that. Our most recent investment was in a company called Boston Metal that are producing carbon-free, carbon-neutral steel. When typically for one ton of steel, you emit another ton of CO2 emissions. So that has been very well received. It's very important for BMW. We made a big, it was a lot of communication to the public about that from board members. So this is really a key topic where we think which will differentiate yourself from other companies, and where customers put a strong focus on when making their purchase decisions.
Yeah. Lior, sustainability within your markets, how do you view it impacting decisions?
For us, we think about this more as a rising tide, because usually the three things that would go together as companies evolve to Industry 4.0 and towards sustainability in the space of mobility is electrification, connectivity, and autonomy. And they're usually sort of adopted as maybe a stage, but as a group where, for example, one of our customers, Loblaws, has a commitment to electrify their fleet by a certain year, right? And that facilitates and makes it easier to then start automating it. And these vehicles are built for better access to or better electric budget, so you can put sensors, connectivity. So for us, it's a great trend. I wouldn't say that we're necessarily the ones that are driving it, but it's more that we're part of that whole journey to cleaner, more intelligent, safer, and eventually more productive mobility.
Great. Just have a few more minutes. I'm curious if there's anything that we haven't touched on that really is a key enabling, foundation for the success of, the future of mobility. I mean, we haven't talked about, you mentioned charging a little bit, but battery technologies, any sort of advanced materials, the digital side of things. Is there anything that's on your mind that we haven't talked about that is really a key investment point or a key enabling technology for this whole market to succeed?
I have one point that I'm curious was not brought up, and it's brought up by customers usually, and that's interoperability. And I touched it a little bit when I talked about the infrastructure, right? But at the moment, I think most solutions or technologies are really siloed. And the way I see this evolving over time is more sort of shared cost and collaborative. And one example is, when a Porsche and a BMW reach an intersection and one can tell the other its intentions, it just creates a much safer driving situation, right? And that doesn't happen in silos. It has to happen to some level of interoperability and collaboration, and preferably not through standards, right, but through business and technical collaboration. So that's a topic that's sort of top of mind for us, especially in the industrial space, but I assume it's as important on the open streets.
I think one topic on the investment front that has gained interest from investors that was not that popular probably a year or two ago is battery developments. When I think a lot of companies found it difficult to find investors in that space, and in the success of QuantumScape in the SPAC process, basically. I think makes them more attractive targets. So we see the battery companies we have been talking to in the past, they have been always, you could tell it wasn't easy for them to fundraise. Now it's the other way around. Now it is, investors are hitting them, and it's almost easy. It's difficult to get into the round. So this is as fast as things can change. And I think being a battery manufacturer, someone who was developing new battery technologies a year ago, probably he struggled, and now he's in a pretty good space. I think that's an interesting development where spec certainly had an impact on the perception of the market.
Great. Talia, anything in your world that we didn't talk to that's a key theme to enable all this stuff?
Yeah, I think you touched upon it in the beginning. I think consolidation in the end is going to be inevitable in this market, and you are going to see a significant amount of M&A activity. As the companies need to provide the entire stack. I think it's going to be inevitable. And just to Lior's point, there are numerous committees that are comprised of OEMs and academia and even large scale startups in order to come together and to create these standards and these norms. And you mentioned that standards wasn't necessarily the way, but I think the coming together of all these players and working together to create and to bring these technologies forward is really going to be the key for advancement in our industry in general. And I agree with that. I think that communication and cooperation is really, and consolidation is really going to be the key going forward.
Great. Well, I think I got the notification we're out of time. So I want to thank our speakers for engaging conversation. Thank you to the audience for good questions. Sorry if I didn't get to your question, but I tried to sample for most of them, and really appreciate the interest. And we look forward to 2 fun days of Israel deal making topics. So I think we'll let you go and have a wonderful day.